lending. The Fed's ability.
Okay, you guys can see my screen with the charts.
Yeah.
I just want to backstep today a little bit and have a look at what we're trying to achieve here. And look at things, look at what we have done over the last couple of weeks. And now you've also, you've got an idea of impulsive and corrective behavior. Now, you guys can, from an investment perspective, you guys can only make money if the price goes up. And what we're trying to do, you guys can see this other screen now, this right, the text, you can see the text.
Yeah.
Because you guys can only make money when the price goes up. My first point, to identify the area where the next most likely price move is to the upside. So in other words, you only want to deploy your money or put your money into the market when you're pretty convinced that the next move is going to be to the upside. You don't want to put the money in if there's a possibility that it's still going to go down and then it only turns later on. And the first thing you do is you take any chart and you look at what the trend is doing. Let's take something else. Let's take the Dow Jones index. I'm going to go into the daily. Let me just get rid of this gemors here. So the first thing you're going to do, obviously you must have your moving averages on the chart. They're on there always. Okay. Now, when you look at a chart, it's always a good idea to start on the weekly. You know, this could be, we know now this is a Dow Jones, we know that these things are going to be like it, but let's say you're looking at a share, any share, the share of your choice, okay? The first thing you're going to look at is, I'm now on the weekly. Now on the daily time scale, the blue one you guys know is the 50-day moving average. This gray one here is the 200-day moving average. Forget about the 100 over here for the meantime. And then over here is the 20, but the main ones are the 50 and the 200. So on a weekly time scale, you also want to see that your price, I'm talking about price sell time, that your price is above your 50-day moving, this is now a 50-week moving average and a 200-week moving average. And that will be a 20-week moving average. Now, then obviously you draw in your trend lines, your bigger trend lines and your bigger support areas. But the next thing you do is you go to the daily and you want to see, you want to pick a share that typically, so you can go like through 40 shares and it doesn't take long to page through. If you've got in your watch list 40 different shares or 20 different shares, it doesn't take long to flip through the charts and make sure that you're looking at something where it's above the 200-day moving average, and that's the first most important thing. You can see here that the 50-day moving average is acting as support. It sometimes dips below that, but there you can see that the 200-day moving average catches it. So this is clearly showing me that this is in a bull trend. The price is going up. You can also see that the moving averages are sloping up. I mean, I know I'm stating the obvious here, but the moving averages are pointing up. If you look at some charts, you'll see, like for example, let me show you gold. Here's gold on a daily. This is a daily time scale. Look at the weekly. The weekly was above the 200. The 50 will be sitting in here. I don't know why it's not showing. Okay, there's the 50. Let me just change that so you can see it on the weekly and the monthly as well. So on the weekly, you can see that gold, you see how sideways these moving averages were running here? The price was in a sideways movement here. Here it started trending. Your moving averages start pointing up. Your moving averages still pointing up, but here they're starting to level off now. And gold is actually at the moment in a sideways market. But it's still above the 200-week moving average on a daily time scale. Here all along it was above the 200-day moving average. And the 50 was acting very much as support. Here it came down to the 200, which acts as support, and it came up. And this was actually, from an Elliott wave perspective, this was a 5-wave move up. And that's why we've gone into this sideways market. So you can see that you're in a sideways market in a corrective phase. Here you were in an impulsive phase. Here at the moment, you're in a corrective phase. So that's the first thing you're going to look at. Then the next thing you're going to do is you're going to draw in trend lines or channels. So let's go back to the Dow Jones. On a daily, or you can once again, you can start on a weekly. This is a COVID drop. You can see you draw on a trend line from there, but you see it better on a daily time scale. So there you can clearly draw in a trend line. And then very often you'll find a smaller trend line closer in, like that, for example. So you draw in your trend lines. It's often a very good idea to, instead of drawing in just a trend line, rather draw in a channel, because a channel shows you often the top of the channel often acts as resistance. But the channel is showing you that this instrument you're looking at is in a bull run. Because remember, the point I'm trying to make here is that you can only make money when this whatever you're looking at is the price is going up. Now, the point I'm getting to here, where I'm going with this whole discussion, is you have to decide where you want to get in. Now, you can't get in here. Remember what I said, that you want to get in. You want to identify an area where the next most likely price move is to the upside. Okay, you guys can still hear me?
Yeah.
Yep.
I'm very quiet. Now if I look at this, the next most likely move, I can't say yes to the upside, because I know market moves in cycles and I know corrections take place. So the chance here is bigger for a correction than it is to go up. So whatever instrument I'm looking at, I'm just using the Dow Jones as an example now. You want to identify an area that the price will come back to, where you can get in. Now, all right, we've said the price is above the 200 and above the 50-day moving average, which shows us in the bull market it's going up. The moving averages are sloping up, or the horizontal means it's in the correction phase. The trend lines in the channel is sloping up. Then look at the current 4-hour, on the 4-hour time frame. It also gives you a better idea of whether it's running sideways or consolidation is taking place. And also you can see whether the price behavior is impulsive or corrective. Now here I've got two options about what you're gonna do with this lot now. And the two options are, the first option is that you join the trend at a continuation pattern. We discussed continuation patterns. So somewhere in this uptrend, you must identify a continuation pattern, and that's where you get in. The option two is that you enter on the completion of a correction or a support reversal area. So there you're waiting for the price to come back to either a trend line, a trend or a channel support, or come back to a moving average, which acts as support. Or you're going to look at it, if a correction is busy taking place, you can see when a correction is taking place. The moving average is just going to be moving sideways. The price behavior is going to be sideways. and you're gonna look for this ABC correction, and you're gonna look for something where the ABC correction is either complete or it's going to complete. And then very importantly, we're going to talk as well about confirmation. And there's a whole lot of things you need to look at for confirmation about whether the price is not actually turning back up. So let's just go on to the first one. I'll talk about continuation patterns. Now, this is, you can see here that the price comes back onto a moving average. It's also come onto a trend line. You can see trend lines very clearly on the S&P 500, but here you can see typically it comes onto the moving average. Now, if this price had to now drop here and come onto this trend line, because this trend line, remember trend line, you draw, it connects previous lows. So if this price typically drops onto there's a buy area. You also look for obviously horizontal supports. There will be a horizontal support in there. When you were back here, for example, you can see, you can't see into the future, but you could have seen there, you could have seen that the price dropped onto a moving average. It often comes onto a moving average and it just dips below. And then, but it still acts as support. And we'll talk just now about confirmation and what confirmations mean. Here, you don't know what's going to happen. You can see there it comes onto the 50 period moving average, and you get impulsive behavior there. That's typically where you want to get in. This is now on the daily time scale. I want to go onto a 4-hour time scale, because you're gonna see continuation patterns easier on a 4-hour time scale. On a 4-hour time scale, that's where we're sitting now. I'm just going to go back a bit. Let's remember on a 4-hour time scale as well, you're going to get shorter term. Here typically the 20 period moving average will act as the support. So the supports on a daily time frame might be the 50, but looking at the 4-hour time scale, you're going to find different supports. And here you can see that typically this 20 is holding the price. That drop down there would have been onto the 50 on a daily, but you can see how it's holding the price. Now, if you, for example, looked at here, all these flags are continuation patterns. Here's a triangle. A triangle is a continuation pattern. That's a flag. Let me make it bigger. So let's say the price bounced off here. It bounced off the trend line, or it bounced off the moving average. The price starts going up. If you didn't get in here and you see this happening, this flag, this is a flag, and you can go read your notes. You all should know at this stage what continuation patterns are. This is a flag. You get flags and pennants, but these are all areas where you can actually get in on a shorter term basis. But you have to use this. You're always using this in conjunction with trend lines. So you'll be drawing in trend lines, and you'll be like, for example, there's a trend line going up there. You could have drawn something in there. It breaks the trend line, but then you can see that this is a corrective pattern. It's not an impulsive behavior like that is. Then you can measure your Fibonacci ratio from there to there, and you're going to see that would have been about a 38% correction. And it's a moving average. So that's where you can get in. And obviously your stop loss will be just below that. Just below that that you decide you're wrong. Let's look at here, for example, but also very important, you will be looking at how far this price has progressed. Like I say, and for that you look at your RSI, your momentum indicator. I'm on the daily. When you'll see as well that when the price corrects, like there's a correction, you see how the RSI dips down into oversold territory. Here on this dip as well, the RSI dips into oversold territory. Here you can see it, there's a massive divergence on the price. So that, yes, you will join continuation patterns, and you will look for pullbacks. But this is a warning to you that you're too late into the party here. If this drops onto there, that would be a buy level. I'll mark that area now. I'll mark that with an up arrow, just that trend line over there. And let's go look on the 4-hour time scale. That's where it is. You can see this trend line, and you'll also see that this will be a Fibonacci level. There, around about 50. And the trend line, so that is a buy area. But the point I'm making here is that you have to the whole time be keeping in mind and looking for divergences, because when you get this kind of divergence, the chance is quite big that it'll drop onto this level. It might bounce off, it might go and make a new high, but with a new high here, this divergence is going to get even worse. You're very late into the cycle here. So it might bounce, it might make a new high, but it might bounce, and it might then come back and break that level. Your next buy level would be on that moving average over there, and which is this trend line here. But I mean, from there to here, you can expect a very good bounce over here. Even if it doesn't go and make a new high, the price will at least bounce up quite a bit, and you can make money in that move. Make no mistake. Are you guys with me?
Yep.
All I'm doing today is trying to show you where you can get in. This is, and there are shares, you will be able to go and find shares that where corrections are taking place. This is the Dow Jones. I'm going to show you the Nikkei.
What about mass mart?
Mass mart. While we're on that note, Jared, you still here? Eh?
Mm-hmm.
Jared, you there? I want you to show you Woolworths before I forget. I'm just finding it here. I remember you said a while ago that you bought Woolworths a year or two ago. You bought Woolworths. I just want to get on to a weekly time frame. I'm going to put it on the chart now. Now I don't know where you bought Woolworths, but I'm going to show you something. Can you guys see this trading view scale? What, from Elliott Wave perspective, what do you see here? You guys should see this very clearly.
1, 2, 3, 4, 5.
That's the 1, 2, long third leg. Your fourth is a triangle. there's a triangle here. So that's a very clear 1, 2, 3, 4, 5. And in here as well, you'll see there's a 1, 2, 3, 4, 5. You're going to look at your, if you're going to look at your, I'm now on a weekly time scale, eh? It's a very long time scale. Look at this massive divergence that's taking place over here. Much lower RSI.
Falling there.
There. So if you look at this and you're busy buying here, remember there's corrections taking place inside here. There's corrections here. There's a correction. That's a nice place to buy. Back onto the 50, back onto the moving average, back onto the moving average. But this must be warning you that even if you're going to get involved here, your stop must be just below here.
Slope. The RFI slope is downwards.
Yeah, if you're going to buy here, your stop must be just here somewhere. Just have a look at it as a matter of interest. Remember the years are 1, 2, 3, 4, 5, and look at the correction that took place. This is the COVID drop here. And if COVID wasn't here, I reckon that would have been the end of the correction, and it most probably would have carried on from there going up. But there you can see your corrector phase and correction. This is actually a double correction because you get an ABC, you get an ABC and an X, and then you get another ABC. Because corrections are sometimes not just an ABC. You even get triple corrections where you get an ABC and then the price will bounce, and then you get another ABC correction, the price bounces again, and you can actually get a third ABC down. But that is all getting onto more advanced Elliott wave stuff, and it's in books, and you guys can read about it. But I'm not going into that detail now. But look at where this correction came into. Exactly 78.6 off this low right back here. So, and I can tell you now, the institutions and the clever guys were watching this, and they bought there, and they into a nice profit here. That's the weekly. You can look at this on a daily time scale. You're also going to see those divergences. There's that 3-4 pattern. You're going to see here as we get closer and closer, the prices also diverging. Look at that. There it becomes really drastic on that last peak over there. This big divergence here. And then you'll see as the price dropped from that initial low, you'll see the different levels where the guys started buying again. All right. I don't want to get hung up on.
What is Woolies doing going forward?
Well,
Looks like
it's back into a bull phase here, you know. But
yeah,
you know, you have to. This is, you know, there was a correction that's taken place there now. For example, that flag over there. This is on a daily. There's a flag, typically a corrective channel that's busy taking place. That would draw like that. But I think you can look around. You're going to find better things to buy than Woolworths. You know, I'd rather look for something on the American market, or I'd rather buy an index. I'm not saying that you know, that's a different discussion. You can also see that there's a trend line here. Just talking about this now, there's a trend line here that it broke, which is positive. It's sitting above your moving averages. You can obviously draw a channel in there. All right.
And if you take a Fibonacci?
If you take a Fibonacci from the top there to see how far it's recovered, you're talking about that. You're talking about doing that now. You can see it's got back to the 38%. Okay, that's not exactly on the bottom. That's and that's actually why it's stalling there. And it's getting very close to this previous high here as well. Very close. But you're drawing a trend line here, and if it breaks that trend line, you know, then you must actually draw a channel in there.
Probably in
But
a
there will be a
ABC
good support there again. If I was going to buy Woolworths and it dropped down to that level there, I'd buy it, because there it would bounce. Remember, you must look. Nobody's going to guarantee you that the price is going to get onto moving average and it's just going to take off and go to the moon. But it's a good entry level. And once you're in, you then look at the price behavior and what happens to it after that. But at least you're in on a level where a lot of other people are getting in, and the most likely movement from a place like that is to the upside. It's not to the downside. Then you manage it after that. And you look at the price behavior when it bounces off that level. How is it bouncing off that level? Look how the price, for example, bounced off here. That's impulsive. You see, there's the ABC. There's like an ABC. You talk about ABC flat corrections. There's the ABC, and it's running sideways. The guys bought there, and you look at this. It made a 1, 2, 3, 4, 5. It's made a five-wave impulsive move again to the upside.
That's where I bought.
1, 2, 3, 4, 5. So there was a good level to get in.
Yeah. But you know, now from a fundamental point of view, these shops have been hit hard.
Yeah.
In Gauteng and Natal. I don't think there are many Woolworths there.
Yeah. Look, yeah. Let's not go into that discussion now. You're getting
very
into the
interested to
fundamentals
see.
again.
I'd love to see how that pans out.
Well, you must look. Yeah, I think the places that were really hard hit were like the games and the checkers and those.
Macro.
Hey,
Pep stores.
Macro.
Pep stores, those kind of things. I was going to show you guys something here. That chapter in that book on channels, they talk about this. You guys must go back and read those chapters, and it doesn't have to take long. They talk about this. You see here's at the price running in a channel, and then it breaks out of this channel. That's very bullish. Now it's formed a new channel. It's formed a new channel now. Here's your new channel. Okay. But that kind of price behavior where it runs in a channel and then breaks out to the upside of a channel is bullish.
So quick question there, Jacques.
Yeah.
If you go to something like that April timeline.
April this year, March, April, yeah, somewhere. Yeah, that sideways.
Sorry, April 2020.
April 2020.
Just after COVID.
Just after COVID.
Yeah, April. Yeah, that's here. Yeah, right here.
Yeah, what's that price there? That's at 27. So you would have had quite a massive growth. You would have had doubled your money, and you're below all the averages.
From there, this price here was 26, and we're sitting at 53 now. Yeah.
Yeah.
But
okay.
As I say, the clever guys are looking for this kind of thing. They're looking for something that comes back onto the, especially with that beautiful impulsive behavior there in a corrective phase. So we've been talking a lot about Bitcoin, but there's a lot of other things to look at, and you can spend like 3 or 4 hours. This is something you're gonna take with you for the rest of your life, and the things you learn here. But if you've got a whole lot of charts in a watch list, to flip through those charts, and you can even later on you can set alarms, and you can start scanning you can in your software in TradingView. They've got scanning facilities that you can go and scan through 50 or 100 shares, and you can set parameters, and you can say, okay, give me all the identify all the shares to me that are currently close to the 50-day moving average, or the price is close to the 200-day moving average. And that way it speeds it up a lot for you. And you go and you look for shares that have come onto a moving average or onto a trend line. And that's where you get in. You can't chase the price. You can't chase the price higher. Here's the Nikkei. I want to show you the Nikkei. The Nikkei is the Japanese index. So this is the index of all the Japanese shares. You guys there?
Yep.
Yeah.
Here's the weekly. There's the COVID drop. There's a support level. There's your 200. There's your 50.
It looks like it's taking strain.
I'm gonna go click on there. What do you see here? What's this?
Oh, it's moving sideways.
So what is this? What is the
In for
good chance?
correction.
What is this? What is this up to here?
5 wave.
Hey,
That's an impulsive structure. It's a 5-wave move.
yeah. So what is this point here?
I think that's you facing an ABC correction after.
Then let's just take it from here. What is this up to here?
A new peak, a new high.
Difficult to see the AB,
No,
the
no,
1,
no.
2, 3, 4,
Very
5.
ABC.
It's very easy. This to me looks like this. Remember 3, 4. Your 3, 4 always makes a triangle. Typically a triangle or a sideways, big sideways consolidation. So this to me looks like something like this. Okay. And in here, you're going to find 1, 2, 3, 4, 5. This is actually an extended fifth wave. So you'll find in your 1, 2, 3, 4, and then you'll find 1, 2, 3, 4, 5 up here. So this could be a 1, 2. Then you get your next, then you get, well, actually the 2 will be there. Then you get your next impulse. Then it'll be 1, 2, 3, 4, 5 up to there. Remember, we're not here. We're not trying to label stuff accurately. That takes guys years to do. And there's guys who specialize in that. You can subscribe to them and all kinds of things. I don't want to teach you guys, but I just want to give you a basic feel of what's happening with Elliott wave.
Jacques, quick question there. Do you find I found putting it into a line scale?
Over there, it often does look clearer on a line scale. Yes.
Yeah. Yeah.
So there's your 1, 2 that looks to me like a 1, 2, 3. Remember, one of the other rules of Elliott wave as well is your fourth wave correction normally comes back to 38% off the first level. So, and this is a beautiful 38% correction. So from that level there, the rule says, remember the rule says that most of the time your third wave is the longest wave. It can't be the shortest.
Yeah.
Very often your fifth wave equals your first wave. The rule also says that your correction from 3 to 4, which is your correction, your fourth leg is your correction. This correction often comes back to 38% of this last move. I'm measuring the move from 2 up to 3. And now, so I'm taking the correction. This move is correcting here. This move, right, is correcting here. Not this move. This move here is correcting now here. 3, 4. And it's come back to 38%. Look how it's come back onto the 200-day moving average here. Over there, buy area. But I want to show you guys, something inside here. There's your 50, right? Remember, we're sitting on the daily. I'm just going to go back onto the candles just because I'm used to working in candles. I'm going to make it a bit bigger. So we can actually draw this as a corrective channel here. Sometimes it's a corrective ABC channel. Very often a 3, 4 like that looks like a 3, 4 is sideways, a triangle. It doesn't have to be a triangle. let's just go here. I want to show you guys what this is a possibility what happened inside here now. So the price gets up there, then it does an ABC correction. A, B, come now, B, and it does a C correction. Now remember I spoke about double corrections. Then the price bounces. So it looks like this correction's finished here. The price bounces and then it fails. And then it makes another ABC correction, a second ABC correction. A, B, C. So now we've had a double correction. It's come on to the 38%. Look at this, look at that candle there that immediately gets bought up. That's a good confirmation. That's a doji. We'll still discuss candles in a different, but you guys know the basics of candles. That candle opened, the price moved down there, the buyers came in straight away and they pushed the price back up. And it actually closed, opened and closed at the same price. Now the price goes up. I'm going to look just at that now. Remember, I'm still on daily. I'm going to go to the 4 hour now. There's that last ABC correction over there, right? The double correction. Let me just take that off. So there was my ABC bounce, ABC correction. What do you see inside here? What's here? What's this?
Well, that could be 1, 2, 3, 4, 5, maybe.
And then an ABC.
There's it. You're starting to see it. Look at this. Look, 3, 4. Here's your triangle again. 3, 4. 1, 2, 4 is above the 1 level. This was actually what they call a flat correction. It's an A, and sometimes the B goes up higher than the first leg down, and then a C leg down. This is actually a flat correction, but it's still an ABC. There's your 3, 4, 5, and look what happened here. A, B, and C correction. You notice this didn't go below this level here. It didn't break the rule.
Yeah.
So that 1, 2, 3, 4, 5 up to there can now be a 1, but this is now a bigger 1. This is of a bigger time scale. And I was getting onto this the other night. So this is now one of the bigger
Longer term.
of the longer term Elliott. So that's 1. But in there's my 1, 2, 3, 4, 5. Then an ABC correction. So this could be 2. But still, this is didn't look at this reaction off here. So even there, you don't know this is going to happen here yet, but you could have bought here. This is a very, very awesome place to buy, because this was an ABC correction in here. It's a 78.6, but you've already identified that this is a 5-wave move, a possible 5-wave move here. So anything that's going to come down here is going to be bought because of this move here. Remember, you're always looking, your history is giving you clues. I mean, that's a very obvious statement I'm making now, but everything you do in future, you can only decide what you're going to do today based on the clues that you're getting out of your past. So there's your 5-way structure. There's a possible ABC correction. You often get this as well, that the C makes a very big leg down. So the C leg doesn't always have to equal the A leg. This you can see as an ABC correction, but the bottom line is 78.6 it holds. Look at that candle. So even if you hadn't got in there, but I can tell you now the guys had buy orders there because it's a 78.6 level. The guys put in buy orders there before the time already. And I'm not talking about retail traders like me or you. I'm talking about the big boys, the banks, the investment funds. They've got guys who do day trading every single day. They put in buy orders there. This price.
Yeah, the correlations.
Eh? There's a trend line. And they must probably got out there. This is a huge profit they made over here. Then the price drops. You can now see it coming into, look, there's a flag, but not to the downside, flag down. Now it actually breaks this level. Can you see it? For a minute, it stopped there because this was actually the 78.6 off this level. So guys would have expected it to turn here now. So in other words, ABC, it's finished. Then here starts your new cycle over here. And then it fails here again. But because it fails there, which is a 78.6 off this level, once it fails there, it drops very quickly because the guys have got stop losses in underneath here. Guys who bought here. And then it takes all the stop losses out. But what an awesome place to buy now again. Now the price is bouncing. What pattern is that over there?
Quick
Head
question.
and shoulders.
The head and shoulders. I was actually looking at all of this carefully last night. Now it's coming down. Now it's coming down to. So yeah, here's a buy area. Yeah, that's a buy area. If it doesn't turn here already, but obviously this is an index. You've got to watch this index in conjunction with what's happening on the S&P 500. And also Powell was talking today again. The Federal Reserve was talking again. They're questioning about inflation and all that kind of thing. But you've got to be watching this together with the other indexes and what are the other major indexes. What they're doing. But here is a buy area. And
It looks like it's entering into a bear market.
No. Remember what I said now. This looks like it's just a correction. And it looks like there's a fifth wave missing here. If this was 5 over here, right? And this was maybe okay 1, 2, and you want to maybe put this lettering in like this. You want to do this 3, 4, 5. Then I would expect a more radical correction here. If it's correcting this whole cycle. Remember, if this is a fifth wave, that's complete here.
Yeah.
You're going to get a more drastic correction here as well. And that's why, to me, it looks like that's a 3, 4. Well, the 4 actually finished there because there was your 3. Correction up to there.
The channel is sloping downwards.
Because it's a correction.
From February to now,
yes,
there's a downward channel.
But that's the correction. The correction is always counter trend, is always against the trend. There's a small correction. It's against the trend. The correction is never with the trend. That's why it's called a correction. This correction. Remember, we're looking on the daily, but this, if this top was in here and this was turning, now I must go and look for 1, 2, 1, 2s in here to look for impulsive behavior that's going to take this lower. And this is not impulsive. This is corrective. This is impulsive. Look how overlapping the price is here. Look how little overlap, and how little overlap there is. Look how much overlap there is here. And it's down sloping. This is busy correcting this move. Am I answering your question?
Yeah. So the downward slope, what you're saying, it's just in a correction and it's going to go up again.
Look also, this was the 200-day moving average, eh?
Yeah, it's hitting a 200-day.
It bounced off the 200
Getting
day.
close to
Never mind that was a 78.6 of that, and that looked impulsive to me over there. This is also the 200 day moving average. Also very important.
Okay.
Now, so I'm just showing you, if this breaks here now, if this price comes down and breaks this level here,
Yeah, then there's big shit.
then something else is on the go, and then one has to relook. But at this point in time, this and what's happening here has given me buy areas, especially this one, where you can get in. There's something else that I need to show you on the RSI. We're still on the daily, right? You see that divergence there as well, eh? Up to that top there. This was also warning you that a correction's coming. You see,
Yeah.
it's a new high on the price, but the RSI is lower. There was your first divergence already. Now, remember, a divergence is a warning that a correction can take place. It doesn't mean that the price is going to turn and come and go screaming down. It's a warning of a correction that can take place. And sometimes corrections don't even are very small. If the price is very bullish, this is a divergence. There's a divergence, but the correction's small, and the RSI resets itself. That's even a better indicator. Look at this RSI, came right down into oversold territory again, and look how small the correction was. That's another indication that this is still very bullish. This thing's not finished. It still wants to go up. Oh, wait. Oh, what I wanted to show you. I wanted to show you how guys trade this. The guys that trade, like you correctly said, now this from that period there is from February up to here. This has been going on for 4 or 5 months already. But now what the guys do is, that's a daily. I'm going to go into the 4-hour time scale. I'm just going to show you what the guys actually do here. I'm just going to squash it so you can see this is this correction I'm talking about. When the up to this point, up to here, when the price is trending up, the moving averages is acting as support. Once you start going into a sideways pattern like this, the moving averages aren't acting as support anymore. Can you guys see that?
Yeah.
Moving averages actually become meaningless. You can't do anything with them. But what the guys do is this is where the momentum indicator, they start using the momentum indicator now, and you see this drop here now onto this level here. You see the RSI becomes very oversold. There's actually a divergence there as well. Then the price bounces. At that peak there, the price is the RSI is gone right up to the top again. It's overbought. Price comes down, it's back into oversold. So the guys, when you've got experience, the guys buy this, they sell it there. There they actually short it. Remember, you guys now can only go long. You can only buy. You can buy here and sell there. Then you have to wait for it to get back here. Then you can buy there and you can sell there. Whereas if you're trading CFDs, which is a leveraged instrument, you can short the market over there. So you can buy up there, you close this position, and you then short the market, and then you make profit on the way down. But the point I'm trying to make is, in a sideways market, just because it's sideways, for the guys who know what they're doing, doesn't mean that you just sit on your hands. This is what they're doing. They're looking at these overbought, oversold areas. Oh, here's right at the bottom again. There the RSI is at the top. And you can see literally every time, at every peak, not that one, doesn't happen every time, it's not foolproof. This one here, the price, there wasn't a reaction down, but the price didn't come all the way down here again. But that's because we're in this impulsive move up here. There, the price, selling it there again, buying it here, buying it here. And that's how the guys trade a sideways market like this. Are we for time? Graham, how's the focus?
No, okay, no, okay.
All right. I'm
Okay
gonna,
for a bit.
yeah, we carry on
15
for
minutes.
carry on for 10 more minutes. Let's just stop a minute. Have you guys got any questions? Do you
Yeah,
understand what I'm trying to? Are you do you understand what I'm trying to show you here?
Yes.
All right, now for the last 10 minutes, let's just look at confirmation. Let's take anything. Let's take the NASDAQ. This is the NASDAQ. You see this? You see what happened now? This has now happened over the last 24 hours. This has happened over the last 24 hours. I'm just taking some of the stuff out. There's a channel. Let me make this a bit darker. You might not be able to see that. You see this beautiful channel that the NASDAQ's been running in. You guys see where the prices dropped to?
Yeah.
That's a buy area.
Yeah.
Now, today, right here, is a place to buy. And your stop can be just below here. But do take into consideration. You see this
In the downtrend.
divergence. See this massive
it's going to
divergence.
drop further.
So you understand why this has happened.
It probably goes to
RSI
145.
much lower than there. So I would buy there. I'm actually, when I'm finished here with you guys, I'm gonna probably buy there, but I can tell you now, my stop will be very tight. It will be here somewhere, just below here. It's come onto the moving average. This is on a 4-hour. It's come onto the moving average and it's on the trend line. If it breaks here, and I'm not talking about spiking below, that's just a spike. If it breaks here, the next area to buy is here. And this will be a very good buying area. Yeah. On this support. Well, even better, yeah. Even better there will be awesome. But here's also support level running through here. But can you also see it's coming back to it's come back to 50% so far off this move. It might even want to spike down here. It might want to spike down to the 60, or it might even come down to the 78.6. But let's just go look at our daily move. I haven't got the moving averages in here, so let's just go into the daily for a second. And you see where it's sitting. It's sitting here on the 10 day. Let me just make that make this smaller. There's my 10, there's my 20. And the 20 is also a very important support level. You see, I'd already put that in even before I even put in the looked where the moving average was. I already identified that as a buy area. And then obviously here's the 50. And the 200's right down here. At the moment, it's holding this trend line, and it's also holding the 10-period moving average. If it breaks this level convincingly, this is where it's going to come. The next.
But the RSI indicates that it's going to break it.
No, not necessarily. You must never make that assumption. The RSI shows you that a correction is going to take place. You can't just make the assumption now that the correction is going to come all the way down here. Look over here. Look, here's also divergence.
Yeah. And it went up.
See, You see, that's that high there. That's that high there.
Oh,
There's the
sorry.
divergence. There's your correction. This correction just came nicely onto that moving average. and
Yeah,
stayed
you
there.
see,
But
it's already
what
done the correction.
But very, what is important though is that we are very late in the cycle. They actually put a 3 in. This could be wanting to come back here 4. You see, they'll put in a 1, 2, 3. There's a good chance it's going to come down here, but it might not come straight down here. What it'll do is it might break that. It'll find buyers and it'll go back up here. And then it'll come down here. It's not just going to make, if it comes straight down here, then there's something very wrong. Then from a fundamental perspective, something's gone wrong somewhere. This will do that. It'll recover, and then it'll come down there if it comes down here. Can you see? Here's a 1, 2, 3, 4, 5. 1. This is now blue. 1, 2, 3, 4, and there's 5.
So it's done.
So this is 1. That's 1 red. 1 in 2, 1 in red, 2 in red. Then on a smaller time scale, 1, 2, 3, 4, 5. So now the blue 1, 2, 3, 4, 5 is from there to there. So now, if this is red 1 and this numbering is correct, and that's 2, what does it want to do now? It wants to correct. It wants to correct this whole cycle, and that's even more reason why it's going to come down here to that 4, because this 3, 4 now wants to come back to this previous 3, 4. They talk about it in Elliott wave theory, and they say that a correction very often comes back to the previous 3, 4. So that looks like it really is heading down here. But that'll be an awesome buy opportunity, because that's then 3, 4, and then our 5th wave is going to be up here. And we're still shorting a 5th wave up, if this numbering is correct, if this 1, 2 is correct. And there's also, okay, no, that trend line doesn't work there. You've got to look for trend lines. I'm going to show you another. I'm going to draw this slightly different. I'm going to take that one out. I'm going to show you that here's also a channel. Can you see that? And you see where the channel intersects. You see that? Also intersects there now.
Shouldn't that bottom channel have a different
So
shape?
no, there was a channel running up here.
Yeah.
Okay, that's a previous channel that I've just taken out.
Oh, sorry.
There was the channel, okay. But now there's also a channel in here. And this gives me even more conviction. Look how many things are pointing to this as being a very strong support. It's a 20-day moving average. This new channel I've drawn in is there. There's a support level here. There's a 3, 4 here. That's a wonderful buy opportunity for even if this moves finished, it's still going to bounce here. I guarantee you that it's going to. If this 5 is in here finished, it's still going to bounce, and it's going to go up at least halfway. And if it then fails, then it's going to come onto the year. I've got the 50-day moving average. This is going to be your next support.
That's almost a 10% correction.
I know, and a lot of people are talking about saying that a 10% correction is due.
Sure.
But don't try to get too far ahead of yourself. That's why one takes one day or a few days at a time. It's not going to come down there to tomorrow. It's first got to convert. It's first got to close below this level tonight. The day is not over yet. This could just be a spike down, and it could recover, and it could actually carry on going up, or it could go. This could be A, and it now could be making a B leg up, and then the C leg comes down to here before it carries on going up. Graham, you there?
Yep.
Am I talking sense? Or praat ek kak?
Sometimes.
Greg, are you still with us?
Yeah.
All right.
I'm making a note here. I'm going to say buy NASDAQ at 14526.
All right, that's enough. That's enough for one night. You guys are reading the posts that I post. I mentioned there last night. I did quite a few posts, and I said there, go onto your Pepperstone account.
Yeah.
And go and practice this kind of thing. Remember, on the Pepperstone account, you can short as well. If you see a divergence, but just remember one thing: shorting a bull market is for the very experienced. If you're going to short there because of this divergence here, your stop must be just above there because you're against the trend. But with that divergence, I would certainly short it, but that's something you must practice. Do it with a demo account. Before you go, I'll quickly show you oil. I think I mentioned oil the other night. Look at this. This is the bottom in March, COVID March. What do you guys see here?
They're identical to the one you just showed. They all look the same.
1, 2.
That's that channel is also it's gonna
3, 4. Now look what's happening now. Now you got smaller time scale. 1, 2. Can you see here's a 5-way move up in here? 1, 2, 3, 4, 5.
Yeah.
You got to be blind not to see it.
1, 2.
There's 3, 4 here somewhere.
And
And
5
then
up.
5 up. And what's going to happen after 5 waves?
1, 2, 3 down.
ABC.
Something like that.
Yes, it's not that exaggerated.
Well, we don't know, but theoretically, it should come back to this level. Here's your previous 3, 4. And that could tie in. Remember, it's got to go back up there first. Now, this move of oil back up to this new high here. We're getting into ridiculous levels here. Look where the price was with a COVID. It dropped to $9 over here. Look what we're sitting back on. But can you see that this move possibly up here could tie in with the NASDAQ and the indexes? One last move on the indexes, and then a bigger correction. Here's your 1, 2, 3, 4, 5. Now I'm actually looking at buying oil right here. This is a daily. I'm just going to go into the 4-hour and just show you here. Here once again, let's just draw a channel in here. You always draw your channels where you've seen your 1, 2 moves. So there's a channel there. It's coming onto this channel and it's coming onto a moving average. But can you see that this is an ABC correction? There's an A, B. I'm just going to make this bigger. C.
So now you're going to have a 1, 2, 3, 4, 5 going up.
Yep. So there was your ABC correction. Now, but look here. Look, there was a trend line in here. There was a place to short it. Also, divergences. Remember this 4-hour onto this level here. Very oversold. There's not necessarily a big divergence here, but you are into oversold territory. You can count here. You can also see a 3, 4, 5. Can you see this is a sideways movement here? This is most probably a 4. So there was a 1, 2, 3, 4. This is a 3, 4. which is remember when you see a triangular movement like this, that's your first indication that this move's nearly finished. Yeah, now you're going to have your triangle
Triangle.
movement for your 3, 4, and this big triangle is also warning you that this move is nearly finished. You're going to get then your fifth wave up there. But so this is an A, B. Now this C could still come down to here.
Mm.
You can actually see inside here as
Good
well.
time to buy,
Eh?
It'll be a good time to buy there.
Yes. Now I'm either going to buy here on this channel, or this price might not. If I look on the 1 hour time frame, can you see here? It looks like a 1, 2, 3, 4. Remember, C leg is always a 5-wave move, eh?
Yeah. Yeah.
C wave. If you guys know that, then it means you've been reading up.
Yeah.
Because I haven't really been discussing this. But remember, your A leg can have 5 waves in it, but it can also just have 3 waves in it. So here's a 3-wave A, here's a 3-wave up to B, and here we're expecting a 5-wave move down, 1, 2, 3, 4. So this is where you buy here. This is where actually now go into Pepperstone, and this is where you put in a buy limit over here, and it's on the channel. But if this is feeling very bullish, it might even turn here before it goes up. But then typically, you've got a resistance level here, so you can put an alert in here. And if this price, you can see, because maybe C is finished here already. You don't know that. That could be C there finished already. Even though the C hasn't come below this A level, sometimes in a very bullish market, the C might end up higher than the A, and it might be shorter. So C can be finished there, but then it's going to turn you and it's going to start going up. Then you buy here somewhere on this move, if you're not going to buy here.
Sure.
Okay.
Yeah.
That's a lot of.
Jeez.
Thanks.
Time out.
Yeah.
Let me just switch the
Okay, thanks.
Thank God I don't have any money in there.
and I can see you guys again. My throat needs a whiskey now. Some of your whiskey.
Okay, that's a good call. I think we've got an open bottle of red here.
You guys got any questions?
No, we don't.
Have you got any charts for the whiskey price?
The way these other oaks are carrying on, the price is going to go up.
But it must be.
From a fundamental perspective, the price is going to go up. Because they've
You don't
trashed
think
all
we
the
should
whiskey.
shorten?
Yeah.
Just pour shorts. Yeah, okay.
Okay, cheers everyone.
Yeah.
Thanks, Ed.
Yeah.
Ciao.
Keep going.
Jared.
Ciao, guys.
Bye.
Yeah.